So today we've got something a little bit different for you guys. I asked you a few days ago, what do you want me to do? You know, the comment that gets the most likes, I will cover that for you. And today I'm going to respond to that one that got the most likes and do the video for you. But same again, before we get onto it, comment down below, whichever one gets the most likes, I will do that video for you. And give you guys a chance to see on the YouTube channel what you want me to talk about, I guess. But yeah, we'll take a look at this. Now the actual most liked comment actually came from you one, which was, how about a quick fire video on some of the state stocks or the US stocks like DraftKings, Gang, Hewlett and Skills, etc. I think you made this comment in regards to my UK portfolio, so he wanted something similar with a US portfolio. That will happen, that will actually happen next week. And with it being 4 different stocks, I don't know which one the 8 likes were for. So, you know, some of them might be for DraftKings, some of them might be for Hewlett. So if you are going to put a stock down, guys, just put one stock down so I know the likes are for that stock in particular. But that will come next week. The one after that got the most likes was this one, which was from Hozanov, I hope I said that right, which said, leave stocks for a moment and tell us how and why did you start investing and some of your first steps. So here we go, I'll try to tell my story as quick as I can about how I started investing. So I started investing in the back end of 2016 to the start of 2017, if I remember correctly. Now, if I remember correctly, at the period of time, it was actually a changeover from presidents. We were actually moving across from Obama to Trump. And at the time, I remember there was a bit of media speculation about Trump coming in and how questionable would he be for a US presidency. You know, a lot of people talked about how erratic he could be as a president. I think at the time, the stock market was having a bit of a wobble because I think people were looking at that like, oh, this isn't going to be good for the economy. Is it going to, you know, cause a few issues in the world, a few tensions between different countries and everything like that. The big Mexican wall idea and all that sort of stuff that was going on. I remember thinking, you know, potentially it could be a little bit of a risk, but for the US side of it, you know, for US businesses, it's probably going to be pro-US businesses. You know, I can see him really trying to back US businesses. He's a businessman himself, and, you know, probably, you know, cut a lot of, you know, corporation rates. That obviously means more profit to businesses. They're probably going to do more share buybacks. And at the time I was kind of thinking, maybe not into that much detail as how I said it there, because I didn't really have that much knowledge on stocks at the time. But that's kind of the angle I was coming from back at that period of time. And the stock market has always been something I've been really interested in. Personally, for me, there was a program I watched. I can't remember what it's called now. I commented on the Discord a while ago. It was more of an actual day trading program day trading rather than actually long-term investments, which I do. But it got me kind of caught in the stock market cycle, I guess. And I'll try to show, if I found it, I'll put a screenshot on for you now. Like I said, it's more for day trading rather than long-term investing, what I do. But it kind of got me interested into like looking at businesses, investing in businesses and the stock market and everything like that. And that's what kind of got me a bit interested in. The timing of the stock market was having a bit of a wobble at the time, got kind of added into all of that. And personally for me, at the time, 2016, 2017, I'd been working full time for probably around about 3, maybe a bit longer, probably about 4 years full time at the time. I would have been around 22, I believe, at the time, and I've been working full time for about 3 or 4 years by then. And for me personally, at the time I had set up a few e-commerce sites. So I was working a full-time job, but I also tried to create a few additional incomes through setting up, you know, selling things on Amazon, eBay and everything like that. So I was getting quite a decent amount of money through doing a full-time job. I was getting quite a bit of decent income from running separate companies that I was selling on eBay and Amazon, and that was bringing some income in. It was quite hard work though, because I had to be quite active with that. And then I kind of read up more on, you know, passive income. What can you do that earns you money basically while you can sleep? And that kind of rich dad, poor dad mentality started coming in about, you know, earning money without having to do too much work. And, you know, stock market investing, index investing was one of the things that kept coming up, and started reading into that at the time. And one of the things that I got kind of fed up with as well is I kept seeing, you know, money sitting in my bank account. And, you know, I had a fair couple of thousand in my bank account at the time. I was thinking, surely there's more that I can do with that, you know, rather than it just sitting there. Surely that money can go do something to earn me more money. And also the mentality of that, you know, at the time I'd started being, you know, I'd been working for, you know, 3-4 years in a full-time job by then, and I was getting more aware of the situation that, without sounding like looking down at people, but looking at people and seeing them, you know, in the later stage of their working life, you know, towards retirement age, and they've kind of stuck at this job for 40, 50 years. And I thought, do I really want to be in a position where I have to turn up every day and work, you know, until I'm, you know, another 40, 50 years doing the same job? What happens if I get bored in 20 years time? And having that option, can I generate enough cash that if I ever wanted to kind of walk away and not do this in, you know, so many years time, I have that opportunity to do it? That kind of played on my mind as well. And like I said, eventually it all kind of pointed into investing into the stock market. Now, I actually have a video on YouTube still from 2017 sharing the first couple of stocks that I owned. I'll try and put a screenshot up for you. It was on my old stock YouTube account before I had to move on to the new one. For if you're new in the time and you don't know why that happened, it's basically for some reason I had a ban on Google AdSense from the YouTube channel from around about 2015. So yeah, that was a bit of a nightmare. So I moved, this is why I moved to this one about 2 years ago because of that ban. Funny enough, now Google have removed that ban, and it was like I didn't even have to move channels, but that's a different story for another day. But that's why I had to move channels. But basically, I've got my, you know, the first stocks that I ever owned on the YouTube channel then. And when I was investing into these stocks, you know, it's not really like what it's right now. You know, back when I was started investing, the YouTube stock market scene didn't exist. There wasn't any stock market YouTubers on the YouTube stock market. It didn't exist, and you had to generally do a lot of it reading, going through online, what people were saying online, and, you know, trying to work out, are they actually telling me good things, are they telling me bad things? And generally I kind of got round to a couple of point of views. I would say 3 point of views. The first point was to start with, just buy profitable stocks. Don't buy unprofitable stocks. Buy profitable stocks. Buy companies that grow profit and revenue. And then there was kind of like the two voices in the, you know, on your shoulders. I did say that, you know, to get the better returns, you have to get, you know, more higher growth companies. So I did take a couple of risks in my quite early on in my portfolio, which I'll talk about in a second. But most of the time it was to buy companies that grow profit and revenue, because that's why share price goes up in long term. Is you're buying companies that grow profit and revenue. So I thought, okay, that needs to be one of the main things that I look for. So that's what I did. Second thing is to buy stocks that you know and you understand and you use yourself. You know, don't go for too crazy stocks. And I try to stick to that. You know, I was trying to buy stocks that I use or know very well. Don't go out of your area of knowledge, which is something that I tried doing. And the third one was valuations. You know, try to buy companies at good valuations. Now that was a little bit tricky, because when you start in the stock market, you don't really have a good idea what is a good valuation, what is a bad valuation. And even nowadays, you know, you do buy things that you think are good valuations, but the stock market's a stock market. If the stock market decides, you know, that we're going to sell that off, it could be, you know, quite a cheap valuation, but the stock market generally might decide, you know what, that's going to lose 50% of its value in the next 6 months. It can happen in the short term still. So even though I'd like to say that even now I have a lot better grasp of the valuations, it still cannot work out for you sometimes. That's just how the stock market works. But try and understand, you know, valuations from, you know, P ratios and everything like that. I didn't really know much like about DCFs at the time and stuff like that. That's what I tried to work out on, and that was kind of more from listening to certain things like Warren Buffett, for example. So that's what I try and do. Now at the time, I think I invested into 8 stocks. Most of them did okay. Some of them I kind of like reinvested into other companies that I thought, okay, they're better opportunities. At the time, I tried to go a bit more international. Eventually I realized, you know what, let's just stick in the US, because the US is a good, you know, a good country that I know with good growth, you know, a stable economy. So at the time I did have like a UK holding. I think the other holding I had was like a Greek holding. Eventually, within a course of that year, I eventually completely moved into the US and just had my investments in the US. So them 2 investments were pretty flat. I think another investment I had was like MGM Resorts, which that did okay. I had Win Resorts, which did very well. I think I bought like $120, and I sold that out for about a year and a half later, for about $200. Made a good return on that one. I believe another one was Nvidia, which I sold way too early, but I think that one did okay. I think another one was Live Nation, which once again, I think that one did pretty well as well, not too bad. But there were two standout investments that I made quite early on when I started investing, and that was a company called Ferrari, which you've probably heard of, and they sell very nice cars. And I bought that one. I think it just IPO'd on the US, and I bought the IPO in the US. Looked at it, thought this is a good valuation, and that one made me I doubled my money up on that one. Did very well on that one, and I bought another stock which was one of the more higher risk ones, which made me appreciate growth stocks a little bit more. The one that had the higher risk did turn out to be the better performer, which was Square. So I bought Square at $20. Obviously now it's worth a lot more. Eventually, only recently it was actually worth $200, but I bought Square at $20 recently after its IPO. The reason why I bought Square is that it looked good growth story. Didn't have too much of a good idea on valuation point of view, but I saw the product, I used the product, I saw it coming into the UK and thought, this company has so much potential, and I bought that one and it worked out very well. And Square and Ferrari were probably the two stocks that I probably owe a lot to, but with both of them stocks, Ferrari returned me over 100%. It was something like 140%. Square returned me, somewhat similar, maybe even a bit more than that. But those are the two stocks that gave me, over 140% returns in something like a year and a half, maybe 2 years. They gave me really good returns, and I was like, okay, if I do this right, I can pick some of these individual stocks, and I can double my money in a decent amount of time. It's pretty good going. So those were kind of like the worst kind. Those stocks, really, those two stocks in particular, were the two stocks that I invested in quite early on, and they worked out very well quite early on, and kind of gave me the mindset of this investing game can do very well. Obviously, there's a lot more things since then that I've learned further down the line, as you do as being an investor. You get a bit more for bull markets, bear markets, time horizons, investing over time horizons. Without doubt, at the time, investing in Ferrari and Square quite early on, it did help that I bought at a bottom after a drop of uncertainty, and then we were in a bull market in 2017. So it was quite lucky it worked out that we were in a bit of a bullish year. If it was a bit of a bearish year, it might not have been exactly the same, but there was a bit of luck in there as well, particularly at the time. But as always, it's like riding a bike. The more you do something, the better you get at it, and that was the stepping stone for me personally. And then from there on, I've just obviously tried to take more knowledge on, and try and become a better investor, and just build up from there, really. So that's kind of where I started investing, and how I built up over time, and where I am right now. And that's how I started pretty much at the 2016 2017, and now I think I'm definitely more obviously you're always still learning, but more of a complete investor, and a lot more understanding about different things, and more of a knowledge and more experience going through different market cycles, different stocks, more experiences of going through the process of buying it, doing the research, doing the the DD, and following it all the way to the point where you sell it. You're always learning, but I feel like I have learned a lot over the last few years that does make me a pretty okay investor. But yeah, that's basically my story of how I got invested in the stock market. So yeah, hope you enjoyed it. Hopefully it wasn't too much rambling on. But yeah, comment down below, let me know what video you want to see next, and the one that gets the most likes, I'll cover that for you guys. But yeah, hope you enjoyed it, and I'll catch you in a bit.